Welcome to Trading Lounge and the US indices for the 18th of January, and starting with the S&P on the weekly chart here, we're looking at this wave 4 low here and 5 waves up for 1 and 2 here, and then 1 and 2 and 3 and 4, and then 5 waves up for 5 of 3 here, leaving wave 4 pulling back to the 38.2% retracement level, so it's still a little bit low here. So that means that this move down through here, we can count that as corrective, as 3 waves. So it's possible that we can get an A wave here, a B wave back up to the 2700 area here, which is the 61.8%, and then another move down into this space here. Or we can just simply move up from here. If we were simply going to move up from here, then we would need to see 5 waves to this point here, the 2700, and not 3 waves. And if we see 5 waves, then we'll pull back as an ABC correction, and then we'll push higher from that point. So let's go in and have a look at that. So just on the daily chart here, just let me squash this up a little bit. So from this high here, we can look at this as an A and a B and a C correction here for wave A, back for wave B at the 2700, and then down for wave C or 4. It's also possible to have wave 4 in here. Like I mentioned, we need to see 5 waves push up through here. Currently we've got 3 waves moving up through here. There is a count that I can see that we can actually count this up as 5 already in terms of 1 and 2 and 3 and 4 and 5 here, and we'll have a closer look at that. So it's possible from that point. So let's just dive in a little bit closer here. So on the 4-hour chart here, we could label it like this here in terms of 3 waves up as an A and a B and a C wave here. And as I mentioned before, we were looking for equality between wave A here, the length of wave A roughly, to the length of wave B, which will take us to the 2650 area here. We know that we've also got the from this current high to this low, the 61.8% is at 26.27, so we've breached through that and we've moved closer to the 2650, which is an important level in terms of the trading levels concept. It's halfway between well, Fibonacci numbers number 5 here and number 8, which I call number 5 here in this case, a medium level. It's called a medium level because it's halfway between 2 major levels, which is 2000 and 3000. And then the 800 here is a minor level, another degree smaller. So we're using the Fibonacci as a price ratio. And there's a little bit more to it than that. Look, so if it's going to fail, then it can fail from this point here. Okay, the 2650. We need to really work out, as you can see over here, we should get some sort of mirroring pattern over here, and once that pattern mirrors itself over here, then it's just a matter of working out, is this number going to be support or going to be resistance. And the normal process for the normal process for this is that we would have the arrival, the reaction, the first high above the level, and then a corrective move here in 3 waves. And then it's at this point here where it could come back to here and fail, or it could just move straight up from there, and this is where we have our long trade here, and this is where we have our short trade. So we'll play support and resistance game on that 2650 area there. That's, in a nutshell, in a broad brush stroke, that's kind of how we'll handle being long or being short in the market. This move to the upside here, let's just take a closer look at that in terms of the 1-hour chart. So from the current low here, we can look at this as wave A here and wave B, or wave 1 and wave 2 here, and then we move up into wave 3 here. So I've counted this here as 1 and 2 and 3 and 4 and 5 here for 1 and 2 here. It's a little bit tricky in this top bit here, I have to say, and I may not have the right count here, but 1 and 2 and then all the way up for 3 here and 4 here, and then 1 and 2 and 3 and 4 and 5 here. So also 2 of those long trades are here. Then we really want to take profit on that number here. So I'll just put that there. There can be another little push higher through there as well. That spike was a spike, so the trend to the upside still can play out here. We can move our stop all the way up under here for this. We want to kind of start tightening things up here. We can always move back in once we've got a setup on this pattern over here. Now, if we were wave 1 here and wave 2 here, and all of this was wave 3 here, then we'd come back to wave 4 here, or to the wave 4 of 1 lesser degree rather, which would be here, and that would also be pretty close to the 38.2% retracement level. If I take it from the 2650 here, and that brings us in pretty much spot on here for that. So that's where we could, that's one of the places that we could look for a move back. So if we get a corrective move back into this space, then we know kind of where we are. And the exciting thing about that, though, is that, you know, if this is a wave 4 here, then we're going to have a wave 5 up here. And if we get the wave 5 up here, then we've got 5 waves to the upside here. And that puts us in a bullish mode from that point. Because if we've got an impulse wave from the low, so the low down here, the market's moved down. If we get 5 waves up from the low here, as such, then we know that we'll get an ABC back. And then because we've got 5 here in the opposite direction of the previous trend, we'll have another 5 waves moving up into this way here. So that's how that will play out. Now, this little move up through here, it's been a little bit complicated to figure out in some instances. So it's also possible to count this slightly different. So I'm going to go to the 2-hour chart here, and the video is really for, you know, to explore basically and look at all the possible wave counts as such. So the current move from the low could be labeled wave 1 and wave 2 here, and then we look at this as 1 and 2 and 3 and 4 and 5 here for the third wave, and A and a B and a C for the fourth wave here, and then 1, 2, 3, 4, 5. So it's possible that we can have 5 waves up already here. But either way, we've reached our target, we're taking profit, and we're going to wait. So this is a play now of gathering evidence of what's going to occur in this place. We can also have a look at stocks as well. I mean, Amazon is one of the largest there, so we can look at Amazon here. So with Amazon here, it's also a bit, this move up here is a bit scraggly. I'm not sure how to count it. I can see that we've got a nice strong third wave here. So perhaps it's 1 and 2 here and 3 here and 4 here, and we're looking for 5 up here. I mean, I noted this was corrective, and last time we spoke we could go long above these highs here, so that's fine. And this is still a little wave 4 in here, so it'll be 1 and 2 and 3 and 4, and it'll still push up a little bit higher. But the point of this, what I'm showing for, is we're actually it looks like we've got 5 waves up here, you know. So that's a real positive in this instance. Like I said, I'm not sure how to count this in here. It's a little bit messy. It could be more of a bullish count. We could also have this wave 5 sitting, wave 1 and 2 sitting here, and then this would be 1 and 2 and 3 and 4 here, and then this would be the third wave here, and then we'll have a fourth wave, and then we'll have a fifth wave here. But either way, it's still looking like bullish, you know, in 5 waves to the upside here with this. There is a bearish count within all of this as well, and this is what I wanted to show on the S&P as well. I mean, we looked at a particular bearish count on the S&P the other day, and we'll look at that again. But in this case here, from the top here, we can count this down as, let me just have a little... Yeah, I mean, this has all been a little bit, this little move down through here. We can count 5 waves from here to here to here. So that makes that wave 1 and 2 here. So this should be wave 3 here, this fast move here. And wave 4 pulls back okay, but wave 3 here is a little bit short in this instance. So this can actually be counted with this over here as an A wave, down for 1 here, an A and a B and a C wave here for wave 2, and then 1 and 2 and 3 and 4 and 5 here. So this making a third wave down from here. So then this makes an A and a B and a C for wave 4 here, and then down for wave 5 here. So we can actually have 5 waves down here, but then this would make this here an A wave here, a B wave here, and then a C wave coming into this space here. So this is what I wanted to show on the S&P here. So I mean, I'm just shooting the breeze here, so don't start throwing things at me. So we had this, first of all, as when we spoke last time, we've had this down here as wave 1 here on the bearish side, wave 2 here, and then wave 1 here, and wave 2 back at the 61.8% mark of this one here. But we've moved through the 61.8% mark, so I've kind of moved that out of the way. But I've also looked for a bullish bearish count, and I don't really see a problem with this particular count here actually. So from the top here, we've got this high. This is the high for the S&P 500. The odd thing is for the S&P 1000, this is the high here. So then it throws, the S&P 1000 would throw this count back into the water. So, but as it stands here for the S&P, we can look at this as wave 1 and 2 here, and then 1 and 2 and 3 here, 4 here and 5 here for the third wave, and then an A and a B and a C for the fourth wave here, pulling back up to the fourth wave of 1 lesser degree here, and then looking at this as 5 waves down here. Now, we could look at this here as an A wave here, whoops-a-daisy, a B wave here, and a C wave moving up to the bit higher up here into the 2700 area here, or 50-60%, or we can look at this as an A wave to here, to the 2650, a B wave pulling back, and then a C wave up into the 2700 here for wave 2 here. So I have found another bearish count. So it's just something that we'll monitor. But the stocks are looking quite good to the upside. You know, there's many stocks. If I can just what's this? This is just maybe this. This is just another charting. This is our charting program. It's just an end of day charting program, the trading levels charting program. But what I want to do here, this is just, this is Adobe here. But there's many stocks like this, and this will do the trick here. But you can see, yeah, we still need to get further above here, but yeah, it was still 3 waves up here in terms of 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here. So we should have made a new high here into the 250, but you know, and I suppose we still could get 5. It's, yeah, no, it's 5 waves here, so 1 and 2 and 3 here. A and a B and a C and a D and an E here for wave 4, down for wave 5, an A and a B and a C here. Yeah, forget what I said there on this one. But what I was trying to say is there's a lot of stocks that look, this move here that's coming down appears to be corrective here. But let me get a few of those stocks together. I thought I could just pluck one out of the water there, but it's not the case. So that's that, and also too, coming into the tech stock Nasdaq here, from the low here, we've also been counting 5-wave structure to the upside too, in terms of 1 ABC for 2 here, up for the 3rd here, and the 4th here. I'm a bit concerned about the 4th, really. It's a little bit small compared to wave 2 here, so it's possible that it sort of comes back to this little problem in here. So I don't know if that's the top of the 3rd and 4th and 5th just to here, because otherwise we would have wave 1 sitting here, wave 2 here, wave 3 and wave 4, and then wave 5 up here just for the third wave. But even so, there's going to be a top in this little space here. So that's really the main point here. So our trade here, let's just put it up under here and block that in here. It's going to play out. That's our 650 number. So copy that, put that there at the 700. So that's where the dance is across there. I mean, you can leave the stop out of the way a little bit further just to allow that to play out. In fact, we can do that. Why not here just take part profit here and just, you know, just allow this to play out here. So just put that on there. But the next long trade here also too, because you know, I mean, we're in a trend to the upside, so you know, we can use the Elliott and say, okay, that's the top, that's one thing, but then trading is another. So the logical thing is that we're in a trade at the moment to the long side, so we want to use trailing stops. They just produce, you know, they cover for our mistakes. And the setups get us back into the market. So we can take this high out here, there, and then also too, I know that number 8's a profit-taking number, so we want to be taking profit at that number there for sure. All right, I think that's about it for this. So thanks for tuning in. Cheers.